That's really great. Thank you for joining, and we hope that you join subsequent sessions as well. Hopefully, you find value in this one. And you know, what are they always saying in that session? Yeah, good to have you all here. Yeah. Okay, so let's get started so we don't waste our time. I know it's a Saturday morning and everyone probably have one schedule or the other, but thank you all. We really appreciate you coming in here to spend the next 1 hour on the session with us. And yeah, today's webinar is titled Essential Tips for Improving Your Credit Score. Um, Again, I'm just going to introduce myself. I know we have many whole-timers here. My name is Tobiloba Odutayo. I'm a financial enthusiast and I'm licensed across provinces in Canada. Today, I'm going to be your host as well as your speaker. So we don't have any special speaker coming on board today. Please don't get tired of seeing my face or hearing my voice. We are stuck together for the next 1 hour at least. So yeah. And yeah, before we just begin, I just like to thank you all. I know time is precious in Canada for coming here. I mean, all the time, every month, we try to share some valuable information with everyone as to regards how you can get that financial education and make sound financial decisions with your money. And I mean, if you guys don't keep coming back, I won't be encouraged to do it. So yeah, kudos to every one of you. You motivate me if you don't know. Yes, you really do motivate me. So I want you all to give yourself a clap emoji. Thank you all so much. And yes, as we go ahead, I want you to make sure that you stay engaged. If it's getting boring at some point, if there's any yawn emoji, just yawn so that we know that, Toby, you have to quickly wrap up. People are getting tired. And then please feel free to drop your comments or questions in the chat box as we go ahead. Did I see Matthew yawning already? Come on. Oh, okay. Please feel free to drop your comments or questions in the chat box as we go along. At the end of the session, we'll definitely take questions. I believe you all can see my screen, right? Okay, so why did we decide to have this topic this month? Sometime last year, I know we had the conversation on these essential tips on how you can improve your credit score. And I know since that last year to this time, there were so many people that were not in that session, and there were so many people that had not arrived in Canada as at that time. So we figured, I mean, this should even be like a biannual cadence, not necessarily once in a year or what have you, because we need to continue to educate people on how they can ensure that, yes, they are using their credits wisely in order to have that good score that eventually adds some money back into their pockets in a way that they do not really understand. So it's basically important for you to know that your credit score is a vital aspect of your financial well-being, right? And it affects your ability to obtain either loans, subsequent credit cards, and even mortgage, right? So by understanding and effectively managing your credit score, you can unlock better financial opportunities and ensure greater financial stability. You all that know me, you know that I'm an MMM advocate. No, it's not that MMM we all know back in Nigeria. This one is make money, manage money, and multiply money. And aside from our regular pay job or your side business, how else do we make all that money? I share tips on how you can ensure you're not leaving any money on the table. So credit score is actually part of it as well because it gives you better financial opportunities and ensure greater financial stability. So in today's session, we will delve into the key factors that actually influences your credit score. And yes, I'm going to share practical strategies that you can use in enhancing it. And yeah, what are those common mistakes you need to avoid as well? So whether you're aiming to boost your score or you simply want a strong financial profile, like you want a very good credit score. My credit score is excellent. So when I look at it, it gives me that joy to say, okay, I can take any loan I want at any point in time. You know what I mean? So yeah, and so we just want to make sure that it helps you maintain that strong profile. And I believe today's session will equip you. Sorry that my tongue is shifting. I'm trying to speak Canadian English because we're all Canadian on this call. We equip you with the essential knowledge that you require. And yeah, like I said earlier, please keep all those questions till the end of the presentation, or you can just drop it in the chat box. So yes, let's go ahead. Basically, we see good credits just ahead. So if I may ask, I don't know if it's okay, if you guys don't mind, you can drop you can drop in the chat, or if you do not want to even, or if you don't mind, you can as well unmute and just give answers to this question. What do you understand by good credits? What does good credits actually mean to you? Can someone just help us? I know this is not a question and answer session. We are all here to learn. So if someone can just put in the chat what you understand by good credits. Anybody wants to help? Okay. Anyone?
I think good credit is credit well above the there's a base score, I think about 750 or thereabout.
Yeah. Oh, awesome, Joshua. Thanks for trying. Thank you so much. Yeah. Good credit actually means when you have that high credit score, that means you're using your credits responsibly. And when they see you're using your credit responsibly, what does that actually mean? It means you are able to manage your debts well. You haven't fallen into any bad debt, or you're not caught up in that trap of bad debt. That's what many residents in Canada do these days. I mean, they get caught up in that trap of bad debt. On the other hand, we have a group of people that are even too scared to own a credit card, so they avoid it. I've had conversations with some people like, I don't have a credit card because I don't even want to own. No, you actually need a credit card. It's just managing it responsibly is what makes you what differentiates you from every other Canadian. So it's important to know that your credit score plays an important role in relation to personal finance and your ability to achieve your financial goals. So, like I said, in this presentation, we would exploit those essential strategies that can help you utilize your that can help you optimize your credit score effectively. So I'm just going to move on to the next slide now. So let's look at importance of a credit score. A credit score, what's even a credit score? Let's take a look at that. We've talked about what good credit looks like because you have a score of, I mean, a high score, right? What does that score actually mean? What it actually means? A credit score is basically like an objective summary of the information contained in your credit report at a particular point in time, right? So while your credit report is a record of how you manage your credit obligations, you see that credit reports, you can actually check your credit report from your banking app. I use CIBC, so I'm able to connect to check my credit report, or you can actually download what we call, there's an app called Credit Karma that I've been using to check what your credit report is. And then in there, you can see your credit score. While your credit report is a record of how you manage your credit obligations, it is from this data that your credit score is basically calculated. So um, it's important that you note that if you do not have a credit account, you cannot have a credit report, not a credit score. So if you belong to that school of thoughts, like, no, I don't want any debt on my head in this Canada, you don't have a credit card, you don't have anything credit related to your name. And you know what that means? Getting mortgage, getting all of those loans and whatever you may just be very difficult for you, right? And another thing is, have you ever wondered why it's even important for you to have a credit score? Like your credit score actually helps lenders to decide whether or not to extend credits to you. In most cases, you even want to get as simple or as easy as a phone plan. Like you want to get a postpaid phone plan. Do you know they pull your credit score, they pull your credit report or check your credit reports? Does anyone know on this call that they check? So now talk about if you want to get a car loan or you want to do other credit stuff. So it helps lender to decide whether or not to extend that credit to you. So it represents that risk that is related to whether or not they can expect you to pay back, whether or not you use debt responsibly. And this is in accordance to the agreement you're signing with them, right? So we are going to take a look at some of the importance of a good credit score. We have the first one. Why is it essential I have a good credit score? Because it gives you a lower interest rate, right? Did you know that a good credit score can help you qualify for lower interest rate on loans and credit cards, saving you more money over time? That's why sometimes when you and your friend are having a conversation and they're talking about mortgage rates and all of you, you see that someone is getting a lower rate and you are getting a different rate, even for the same 5% down payment or whatever percentage you're dropping. The same applies to car loan as well. It's because that person has a better credit score than you are. So lenders feel more comfortable with that person to be able to pay back than you are. So because they are taking more risk on you because you have a lower credit score. So that's why they are increasing your credit, your interest rate, basically. Right. Another importance is a better loan approval chances. Oops, I'm sorry. My phone just, what? No, I'm just going too far. Okay. Another importance of this is better loan approval chances, right? Lenders are more likely to approve your loan application if you have a strong credit score. And we have high credit limits. With a good credit score, you may be eligible for higher credit limits, giving you more financial flexibility. That's how sometimes you come in as immigrants at the same time and someone is already having like a 10,000 credit limit and you're still stuck on 1,000 or 2,000 credit limits. Yes, that's because that person is managing his or her debt responsibly. So the lenders feel very comfortable increasing their credit limits. Also rental application, some property companies actually pull your credit score as well. They want to know if it's good enough for them to be able to approve your chances, for them to be able to approve you for rental housing. So basically, it actually improve your chances of getting approved, right? And also favorable insurance premium. Some insurance companies offer better rates to individuals with good credit score as well. I hope you know. Employment opportunities. Yes, I've heard about this, but honestly, I've never had any employer pulled my own credit score. But yes, when I did some research, I understand that some employers actually check your credit score as part of the hiring process, particularly for financial positions that are transactional. So just take that. Also for financial stability, maintaining that good credit score is an indication of you having a responsible financial behavior. So it's contributing to your overall financial stability. So now that you understand the benefits of having a good credit score, let's now take a look at how effectively you can use and manage the credit card. I'm going to start off with the life cycle of credit cards. So every credit card has a life cycle. First one, we have the billing cycle. The second one is a statement closing date, and the third one is a grace period. So now let's dissect this. The billing cycle, you can say AKA alias opening and closing dates. The billing cycle is basically like a 28 to 31 days time interval when any purchases payment you make with your credit card is built into your credit history, right? And the statement closing date is the end of that your billing cycle. So depending on, I think my statement closing date is like 7th of the month. So my billing cycle starts from 8th of the month for another 28 to 31 days till the end of the statement closing date as well. Um, your credit issuer will take at the end of your billing cycle, your credit issuer will take a snapshot of your account balance and your credit limit and report it to the credit bureaus, that's the CBs. And at this point, you start to control what get reported to the CB about you from here, right? Vis-a-vis, did you pay early? Or are you making the minimum payment balance or what have you? Now we have what we call a grace period. A grace period just refers to the payment due date. So when you see your statements being issued for, I'm just going to take myself an example. My statement comes out on the 7th of every month, and my payments due date is 28th of every month. So that timeline between 7th of the month till 28th of that month is my grace period, essentially. So it's also referred to as the payment due date, and this is usually 21 days after the date of the billing cycle. The payment due date falls on the same date each month so far. that I know. So we move quickly to the next slide, still talking about the life cycle of credit cards. So I kind of visualize this for people because I know some people prefer to, visualize things for them to understand better. So this is the first day, which is the statement billing cycle open. So let's say this is your billing cycle opens on the 5th of July. There's a 30-day statement period, and your billing cycle closes on this 4th of August. Right? This is that window called your grace period. So you have from this 4th of August till 24th of August to pay your debts. Right. So let's say you buy a smartphone on the 5th day of July, and then whatever purchases you make within this date would reflect on your statements billings on your statements on the statement day. Right. And I'm just trying to get so whatever happens after this 4th of August is not, so how do I put it? Whatever happened on the 4th of August at this time, let me retract this. If your payment due date is August 24th, you make the payment any day from the 4th of August till 28th of August. Do you get? However, it's advisable to make the payment a few days in advance to allow for processing time and avoid any potential delays that could result in interest charges. So basically, you're strongly advised to pay your credit card debt at most 4 days to the due date. Again, what I'm trying to explain here, some people just get it confused to say, okay, now my statement date is 4th of August. It has been issued. Whatever I purchase from this 4th of August to 24th of August is actually going into your next billing statement. It doesn't have any impact on your current billing statement. So let's say, for instance, I think I have that on the next slide before I explain too much here. So, okay, yes, this is it. Your statement balance is the amount you owe at the end of a billing cycle, while your current balance is the amount you owe at a particular time. So in most cases, your current balance will equal your statement balance plus new purchases. I don't know if I'm communicating correctly, right? And your current balance will reflect on your next billing cycle. But if you pay it off, it won't reflect. Whatever you pay off by that time would not reflect on your next billing cycle. I don't, if I'm communicating with you, I hope I'm not confusing anyone. I'm trying as much as possible to simplify this explanation so we can all get it properly. Right. And at any point in time when your statement comes out, you see what we call minimum payments due of $10. This is that amount. This is the minimum amount that you could pay to the credit bureau. The reason why you have to pay this is you won't get reported for not paying. If you've paid the minimum payments, it shows that you've paid on time. So it still helps your credit report, right? However, the ripple effect of that is whatever balance you're carrying forward is impacting your credit utilization. So if you pay the credit minimum balance or minimum payment of $10 before the due date, your credit score will not be affected in a nutshell. You will only be charged interest on that unpaid balance. But again, I repeat, that unpaid balance actually gets accumulated because you pay that 20% interest rate gets slammed on that unpaid balance immediately. And then that unpaid balance begins to accumulate, which in turn would impact your credit utilization. For most people, the interest rate on credit card is usually between 15 to 25% monthly. So you're strongly advised never to carry a statement balance past the due date. It's okay for you to pay the minimum balance, but minimum payments, but it's not okay for you to just keep carrying forward the rest of the balance because the interest will start accruing immediately. And that's how people fall into huge debts in Canada. So basically, what I'm saying right now, it's not a good financial behavior, and you could fall into huge debts because of the outrageous interest rate on credit card. The worst kind of debt you want to get into is credit card. When I got into Canada, my first job was in collections, and I think that actually was an high hope now for me. Like, this is what credit card could do to people. You just start off with a debt of 1.5, and before you know it, it runs into thousands of dollars just because of that 20% interest rate that gets slammed on it, and it begins to accumulate over time. Okay, so how is my credit card calculated? People want to know what's the basis, what are those metrics they use in calculating the credit card? Number one, your track record for repaying your loans and credit card balances. Right. Firstly, I want you to note that the credit score is a three-digit number that helps lender to make approval decisions whether or not you borrow money. The credit bureau calculates your credit score based on many factors, which we have listed here. Um, your track record actually helps. And when I say your track record, that's why I said initially that if you make the payments, the minimum payments due of $10, it doesn't impact because you have paid. It's giving you that track record of, okay, you're paying your credit balance on time. Number two, we have how much money you currently owe on your credit account, because the amount you owe on your credit account actually increases your credit utilization, which in turn could bite your credit score as well. Um, how long your account has been opened, we would strongly advise that you do not close long outstanding credit accounts, because I mean, lenders are able to see that, okay, you've had this credit for a very long time and you've managed that credit responsibly over the years. And also the different types of credit you use or your credit mix. Okay, so what do we mean by credit mix? Your credit mix actually refers to the different types of credit you hold. So such as credit cards, line of credit, and mortgages. So in addition to your credit mix, the number of accounts you have also influences your credit score. So for most people, they have like one or two credit cards. They have a line of credit, they have a mortgage, or they have a loan. So all of those ones are actually a combination of your credit mix. And also how much credit you use compared to the amount of credit you have available. So this fifth point, I think, is what we call credit utilization, which actually is a very high sensitive metrics in using to calculate your credit score. I have it on subsequent slides, which I'm going to talk about. And lastly, how often and how recently you have applied for credits, basically. So moving on. Now, there's the reason why we are all here. What are those key factors that affect your credit score, and what are the strategies you need to put in place to increase your credit score? Uh, Number one, I use this chart to represent the percentage of how each of these metrics impact your credit score. The first one is new credit. At every point in time you apply for a new credit, yes, it actually impacts your credit score, because that's what we call a hard pull is being done to your credits, right? We also have payment history. Um, Payments history also looks at your record of on-time payments versus late or missed payments. So this is the most significant factor, as timely payment shows that you are financially responsible, right? So now that you know that late payments constitute 35% to how your credit score is calculated, it's crucial that you pay all your bills before your statement due date. Remember, I shared like a life cycle and visualized what that date looks like. So when you want to make your payments, ensure that you're paying on time before the statement due date. We have two CBs in Canada, I think Equifax and Trust Union, and they see your credit history at the end of your statement due date. So whatever information gets to them impacts your credit score. Right. Now, talking about credit utilization, that's 30% of 30% metrics of your credit score. And for this one, I would like to go over it in detail, as I get a lot of questions on how one can keep a low versus high credit utilization. So I have a different slide to talk about this one. Okay, so we're looking at length of credit history as well. Keeping the oldest account on your credit file is another significant way to improve your credit score. So longer credit accounts are generally more favorable. New credit users or those who frequently close accounts may have shorter credit histories, which can lower their scores, basically. So the longer you have, the longer the credit account you have, the better for you. So this actually gives at least 50% of what's being used to calculate your credit score. And then, okay, so I think the last one, what could be here? I'm just trying to remember. Yeah, credit mix. So credit mix, so this is 35, 35. So credit mix is about another 10% of the metrics used in calculating your credit score. A good mix of credit account shows how you can manage various credit responsibly. I think I mentioned this in the previous slide. And because I'm saying a good mix of credit helps you to um, show that you can manage credit responsibly, please and please and please do not go and gather multiple credit cards because you want credit mix. Had good debts like mortgages or line of credit to leverage your credit mix rather than going to get lots of credit cards. Mr. Machi, do you want to say something? I saw that you were okay. I see because when you get into some of these stores these days, everybody wants to offer you like a credit card, a credit card. So in as much as possible, for me, and this is just my own personal opinion, everybody can do whatever pleases them. And this is not a financial advice. I have, yes, two credit card, and the reason why I had the other one is one MasterCard, one Visa card. There are some grocery store or some merchants that you can't use Visa, they only accept MasterCard. So that's the only reason why I had to get one MasterCard and then one Visa card, basically. And then, yeah, new credits. I think I made a mistake. I mixed it up. New credits actually is the number of recently opened credit accounts, and they add inquiries on them, which can signal financial distress. So, like I said, at every point in time, you call the bank to say, oh, I want to open a new credit, or even you go to the store and they say, okay, do you know if you get a PC Optimum card, we'll waive the credits, blah, blah, blah. You get 3.5% on cashback on groceries and all of those things, and you just consent to it. Yes, all of those things actually had inquiries because they'll have to pull your credit score or your credit report. And if you have multiple ad inquiries in a short period, it can negatively impact your score. So you may want to limit that as well. Okay. So now credit utilization, because this is an important part of your credit score as it constitutes 30% of your score, and monitoring it closely is key to a healthy credit score. So let's explain it. The credit utilization, I'm sorry, I'm looking at this way because that's where I'm sharing my second screen. The credit utilization ratio, also known as your credit utilization rate, is the ratio of your current revolving balances divided by your revolving credit limits. So, for example, you have a 20,000 in credit allocated and you are using 2% of that credit. Your utilization rate is 10%. Right. So let's say you have this 20,000 does not necessarily have to be in one credit card. It could be in multiple credit cards and your line of credit as well. And whatever you use across those credits is what is calculated as the total credit you've used in the month, divided by the total credit allocated to you, and then we get 10%. So follow the steps to calculate your credit utilization. If you want to take a note, if you want to take a screenshot, please feel free to do that so you know how you are utilizing your credits. Add up all your revolving credit card balances, Costco, Walmart, PC Optimum, and whatever. You had them all up. Add up all your credit limits. That's the maximum amount you have on each of those cards is the credit limit. When I say revolving credit balances is how much you've spent so far on those balances during your billing cycle. And divide your total revolving credit balance from step 1 by your total credit limit from step 2. Multiply that number by 100 to see your credit utilization score. It's important that you know that using above 30% of your credit utilization is a red flag, and it could really impact your credit score if you go above 30%. Yeah. Sometime I think it was mid this year, I took a loan from my line of credit of course, for something. And that actually dropped my credit score, like dropped it by almost 100. I think I reached out to Mr. Marshall, like, oh my goodness, my credit score has suffered. Like it was so huge. I didn't believe it. Right. But then immediately I paid back that loan, I recouped back all and I've gotten back to my over 800 now. Right. So, um, according to the Consumer Financial Protection Bureau, experts recommend keeping your credit utilization below 30% of your available credits. And yeah, I think we've talked about this. I totally forgot it was even here. So whatever balance you accrue by your statement date is used in calculating that your credit utilization. So that's it. I'm not just going to repeat again. If you struggle to pay your credit card balance and you start accruing interest, you are strongly advised to discontinue using the credit card until you can curtail your spending habits. And I mean, spending habits also falls back to proper financial education and having and being able to plan yourself very well. Yeah, so I offer a financial education session. It's important you know what are those steps in which you can use in managing your debt, which starts from actually creating a budget. It's very important. When we talk about creating a budget, it helps a lot because sometimes I also get carried away. Lifestyle inflation, you just want this, blah, blah, blah. Even spontaneous purchases, no matter how you try to avoid it, somehow you just find yourself in it. Especially all the ladies on the call, our Amazon order. Sometimes you just order some things we don't need. But if you are able to come up with a budget every month, I mean, budgets to the last dollar, even if you're a Christian here, if you pay tithes and offering in church, budget it. Put it in your budget. If you pay black tax to your people back in Nigeria, put it in the budget. So that's why it is important. Yeah, so I think we are almost done, or we are done basically. It's a very quick session. Just a summary, to improve your credit score, you want to focus on paying your bills on time, keeping your credit card balances below, keeping your credit card balances low. And when I say pay your bills on time, please let's avoid paying the minimum balance, the minimum payments due, $10, please, and please. And monitoring your credit reports for errors. I suggested I gave an application, an app that I use, Credit Karma. It's been very, very intuitive and very straightforward. You can just download the app and send it up. This is not a paid promotion. I don't know who owns the Credit Karma app. I just see that it has been working for me, and that's what I use in monitoring. Sometimes there are some new inquiries that they do. At some point, I would just check and like, these people pulled my credit for what again? Do you get some things that I didn't know that they would even ever pull credit for? And then I'm seeing it on Credit Karma directly like that. And yeah, ensuring you are diversifying your credit account responsibly, keeping all your hold accounts open. If you want to close, if you feel like you have too many credit accounts, yes, at some point I felt so. Aside my Visa and my MasterCard, I was trying to purchase something on Amazon one day, and I see that okay, if I get their credit card, they will give me $100 gift card. Like, my sister, I don't want to leave any money on the table. That's how I got their $100. I got their credit card. And I tell you not, 2 months after using it, I closed that account immediately. What do I need it for? I don't need it for anything. I've gotten your $100. I'm not trying to cheat the system anyways. I'm just finding that loopholes in it and to make more money for myself, basically, right? So I just figured I didn't need that Amazon MasterCard at some point. For myself, I didn't need it because I had two other cards that I could use, and keeping old accounts open, limiting new credit card applications, negotiating with creditors if needed. Another thing I found out that has happened to me was there was a time that I didn't miss payments on my credits, but I think I missed the total amount I was supposed to pay. Instead of $2,050 that I was supposed to pay, I paid $2,000. Do you know that they slammed me interest on that? The interest they slammed me on the $50 was $34. I don't understand how, even if it is 20%, why would you slam me $34 interest on $50 that I forgot to pay? Do you get? But I was able to call them and I negotiated. In fact, declared it up because I told them that I'm always paying on time, blah, blah, blah. So that $34 was actually wiped off. So you can actually call and negotiate things like that. Or if you pay, and maybe the balance in each your credit card, your credit statement on time, and they charge you interest, you can always call them back and negotiate. Don't always just assume that it's a done deal, right? So yeah, this strategies emphasizes responsible credit management, avoiding excessive debt, and ensuring that you are not falling into huge debt in Canada. Yeah, I think we're done. I would like to take questions right now. If you have any questions for me, please you can raise your hand, or you can just okay. Mutsurai, I see you have a question. Please just go ahead. Okay.
Thank you so much, Toby. I don't think it's more of a question. Sorry, I'm on the move. While you were talking, I just remembered something that I think happened to me, and I was thinking I could share.
Okay.
I missed my payment with my phone bill, and I didn't know how that impacted so much on credit card or my credit scoring. Up to today, I still have that, under your payment history, I still have
Mhm.
that outstanding showing against me like I had one missed payment. And I think just because of that, it was just negligence. I just felt like, oh, I paid that bill. And I think I lost track of when that bill was eventually paid. And up to tomorrow, when I open my Credit Karma, I still see you had one missed payment. And when I open it, it's just a phone bill of, whatever amount that could be. That is how much these things could actually impact as credit score and drop it as much as possible.
Yeah, thanks for sharing, Motunrayo. And honestly, that's what happens. And that's why most of this phone companies and what have you would want to pull your credit score because they get registered with the credit bureau. So at any point in time you miss any payments, you just get reported. So even some landlords are doing it right now. You can get registered and you let your tenants know that you're registering them. So if you miss your rental payments, they report you, and that would really impact your credit score. Thanks for sharing more. Henry, do you want to go?
Yes, thank you for the opportunity. The question, I just have two questions to ask. You mentioned about the fact that some merchants could possibly tell you that they will give you a credit card and so they're not going to actually do any kind of credit check on your account. But at the end of the day, they go on checking that. The question I want to ask about that is there any legal implication of making such kind of no hard credit check, but end up doing that on your account? Could you possibly take an action, legal action against such kind of merchant who has made that kind of promise, but failed in that and went on checking your credit history? Then the second question I have is, you mentioned about the fact that we should spend within 30% of our credit limit. If I spend over 30% of my credit limit and pay part of it just to bring myself back into within the 30% of my credit limit, maybe 5 days before statement date, is there any issue around that? Thank you.
So yeah, Henry, I'm going to take your first question regarding some merchant having to do like a ad inquiry. I think they would always have to let you know. What you don't know is when you are signing up for any of this credit card, the terms and agreements they send to you. I know it's a whole lot. Most Africans, we don't read. That's just the truth. There are fine prints there that they would have indicated that they'll be doing a hard inquiry on your credit score. So at this point, I don't think you'll be able to sue them, except maybe you have not been notified. But in most cases, people know that when you want to apply for an increase in your credit score, or you want to have your credit limit, or you want to get a new credit card, merchants will always do a hard inquiry. So it's part of the terms and agreements they would have shared with you that you would have consented to before they proceed to do the hard inquiry. Right. And then the other question, like if you spend above your credits, if you spend above 30% credit utilization in a month and you pay back within your billing cycle, will this impact? No, I do not think. And I'm open to suggestion or feedback from anyone who has an experience, experienced this. No, I do not think it would impact, because what gets reported is what it is as at the end of the billing cycle. So if you're paying back, let's say you have 100,000 credit limit and you used 40,000 within your billing cycle. And before the end of that billing cycle, you've paid back 15,000. It is the balance as at the end of that billing cycle that gets reported that will be used in calculating your credit utilization. So yes, that shouldn't impact, provided it is paid off before your statement date.
Okay,
if that
thank you.
helps.
Can I add one more thing?
Oh, sure, please go ahead.
Can you throw more light on the lines of credit?
Okay, so for lines of credit, there are actually two types of lines of credit. We have the secured line of credit and the non-secured line of credit. The secured line of credit actually is actually tied to your mortgage. So if you have a home, that's like your home equity, that's the secured line of credit. The good thing about the secured line of credit is because it is tied to your home is seen as a collateral in case you default on making that payment. So interest rate for line of credit is usually cheaper. Right. It's also a credit, but it's actually tied to your home. And the other one, which you called unsecured line of credit, is not tied to anything. There's no collateral on that. So the interest rate is usually higher. If you have a secured line of credit, like a home equity line of credit, it's usually around 7, 8, to 10%. But if you have the one that is unsecured, the interest rate is usually higher. So how do you get to spend this money? So let's say you have a 50,000 line of credit, whether secured or unsecured. The thing about it is, if you want to use it responsibly, you can take your line of credit to do whatever. But in this case, I'm not advocating that you spend it anyhow. Maybe you want to use it for a good whatever, maybe for investment or to buy a home or to do something. The interest rate is calculated annually and prorated monthly. So you don't necessarily need to pay back the balance like ASAP, but the interest rate every month it's reflected on your line of credit. So you have to ensure you are paying that interest rate every month. If you do not pay that interest rate every month, it could also get reported to this credit bureau. So you pay that interest rate every month until you pay off the total balance, or as you're reducing the balance on the line of credit, your interest rate is also reducing as well. Do you get? I don't know if my explanation helps.
Yeah, thank you so much, Doctor.
Okay, you're welcome. Courage, you have a question.
Yes, thank you so much, Davidola, for the session.
You're welcome.
I have a question. I noticed I'm roughly new in Canada. But
Do you want to turn your volume up a bit? I'm just struggling to hear you.
can you hear me?
Yes, it's better now.
All right. Yeah, I wanted to say thank you for the session.
Yeah, you're welcome.
Very enlightening. I had one question, and that is, I'm sort of like roughly new in Canada, if I'm allowed to say roughly new, about 6-7 months. And I initially got a credit card for $2,000, and it just recently got increased to $3,000. But I noticed that, but I've had the Credit Karma for about 2-3 months. But I noticed I've always stayed within 30%. I've always paid before the statement due date. But I noticed that for some reason, and this is not even being reported on Credit Karma, like the reason for the decline. Over the past 6-7 months, it has dropped by 20 points. And I'm wondering why it's dropping by 20 points without any reason. There's nothing that's been flagged or anything. And I'm wondering if it's normal for it to be just reducing by, sometimes it can be 3 points, sometimes 5 points. Then over time now it has been 20 points that it has reduced by.
Okay. And looking at those metrics we discussed the other time, you didn't apply for new credits during that time? You didn't get a new phone plan during that time?
No. As a matter of fact, when I initially got it, I got it around the same time I got the phone and everything. So I had like, let's say I was on 730. Then after 1 month, it immediately jacked up to 755. And after like 2 months, it now came down. It's currently 729. So I'm just wondering why it's reducing. And when I check Credit Karma, it says immediate history 100%, credit utilization 25%, derogatory remarks 0, had inquiries 1. That's the one that was on when I got the credit card. Credit age 6 months. That's for my phone bill. That's the oldest credit age. And then that's it.
Okay, so for me, I would think if you're paying on time and you're not using above 30% of your credits, you're not using above 30% credit utilization at this time, and you're not being reported, there are no ad inquiries, just to be sure of that, because the major one I would think would cause this ad inquiries would be ad inquiries. So I'm not really sure of what could be happening, but we can take that outside of this meeting, maybe have that conversation. I mean, outside of this meeting, I'm not really sure of what could be happening at that moment. Or if anyone has ever experienced this, if you can share any experience you have regarding your credit score reducing without any cost. Does anyone have any idea what could trigger this? Okay. No one. Yeah. I'll move on to Jacinta right now.
Okay, while she's coming up, I just wanted to say there's some questions in the chat. Thanks.
Oh, okay. Sorry. Thank you. No, it's not when you are the host and the speaker at the same time. Where's my chat?
So I've already responded to the questions, but there are
Okay.
some that will need like verbal explanation. So after
Oh,
the last
okay.
question, we can come to the
Okay.
chat.
So let me have Jacinta. And I know she had, sorry, I don't even know if Jacinta is a male or female.
Hello, everyone. Good afternoon.
Good afternoon.
Sorry, this is my first time of joining this class, and I'm new in Canada. I'm just 2 weeks in Canada, and I just got my credit card 2 days ago. So my question might be ridiculous, but please pardon me. So the first question is, how do they send the statement? Is it to my email? The second question is, you mentioned 30%. I should only use 30% of my credit card. So the credit card they gave me is just $2,000. So the 30% should be like $600. The third one is, can someone do cash withdrawal from credit card or debit card? Thank you.
Read myself. Your first question, you're new, you just got your credit card, and sorry, you just got your credit card. How do you check your statement? So yes, your statement gets, you can check it on your app, on your banking app. I don't think they sent it to email. I've never received mine in my email. Or maybe you can get a notification in your email that your statement has been posted.
Yes, I
right?
think
If you
get
set
a
up your
notification.
email, yes, you can get a notification that your statement has been posted. But when you go to your banking app, you click on your credit card, you open your credit card, you click on that credit card transaction. There's a place you see the statements. There's a place you see the statement. I'm trying to go over to my, I don't know if that would help right now.
Sorry, let me just add for
Okay, Henry,
CIBC
thank
Bank.
you. Yeah.
You could just go to the document section of your account. Then you see both the credit, the savings, and the checking account.
Yeah.
You can just click on any of the ones that you want to actually look at. You download it and look at it. It's usually in PDF.
Yeah, sure.
Okay.
So you see it's written the statement details. So just view each statement and then you can select the month you want to look at. Right.
Okay.
So, yeah. And then the other question about sorry, someone is trying to get my attention on the call. I'm just going to mute my phone. The other question about credit utilization. So yes, for you, because you have just 2,000, so 2,000 is your entire credit limit. Your credit utilization to stay under 30% or 30% and below, the maximum you can spend within your billing cycle if you don't pay back would be $600.
Okay.
Yeah, so that's accurate. What was your third question again, if you don't mind?
I can use my debit card to do withdrawal, cash withdrawal.
Yes, so credit card, I would advise against it. You can actually withdraw, but the interest rate is crazy.
Okay.
Yes, so I would totally advise against withdrawing from your credit card. It's crazy. Yeah, it's just like
not withdrawing from my credit card, right?
Yeah, do not withdraw from your credit card. Your withdrawal should be from your debit card, if at all. So just use your credit card for purchases and all, and do not withdraw from it because the interest rate is really ridiculous.
All right, thank you.
You're welcome. Okay, so can we go to the chat now? Okay.
Before going to the chat, so the motive of this kind of session is to get you educated so that you have the knowledge. So he's advising against withdrawing money from your credit card because it doesn't make sense. But there have been scenarios whereby the only option you have is to withdraw from your credit card. It doesn't mean that it's not possible, but you pay interest. As a matter of fact, for withdrawing that cash alone, some merchants may charge you $50 as in addition to the interest. But we have people that find themselves in difficult scenarios and they need quick money. So it is there. It's available. There is a cash option. But you could just withdraw 1,000 and within 1 month, you're already paying an interest of $150 in total. It doesn't make sense, right? But yeah, it's possible.
Thank you for clarifying that, Mr. Machi. Okay. Do you want to take the questions in the chat box or should I just proceed?
You're the boss now, so if you want to take it, go ahead.
Okay,
so just continue.
Okay, where do I start from?
Start
okay,
from,
someone Temitope Badmus is asking.
No, start from You have explained line of credit. For example, start from that of for example.
Okay. For example, I use my credit card to make a payment November 15th and I repay back November 18th or November 20th. Does that increase my credit score or it has no impact? Provided your statement date does not fall between these dates, it's not November 18th or November 20th, it does not increase your credit. Does that increase my credit? It does not have any impact. So you're still, I use my credit card to make a payment November 15th and I repay November 18th. So I'm just going to say, provided your statement date is not on this date you're paying back, it does not have any impact. So basically, you're still paying on time, and it's not what gets. So I need you to understand what gets reported to credit bureau is what is in that transaction, what is in your credit history for that month. So let's say you buy something worth 1,000 today and you pay back 300 the next day. If your credit statement is coming out November 20th, 1,000 minus 300, only 700 gets reported. I just want you to understand that. So it's not going to report 1,000 and then you pay only 700 gets reported as what you've spent. So I need you to understand that bit, that it is the balance of what you have spent so far, less any payment date, is what gets reported to Equifax or any of the credit bureau. How do I know my billing cycle and when to pay? I think you can see that on your credit card statements. If you go into your banking app, Henry explained it now how you can check. You go to the statements under the summary, you can see what your balance is. You can see the payment due date. And if you actually want to look at your credit statement, another thing I would say is everyone, please learn to always look at your credit statements. If that credit statement comes in, always review, because there are sometimes you go to the store to make some purchases, you make that return and then it doesn't get posted or something. I've had that situation before where for me, as a financial person, every dollar counts for me. So I always take a look at my credit statement just to be sure that, okay, what are the spends that are going in? Is this something I used or is this something that someone is using on my behalf? Basically. But I hope you understand how to know your billing cycle. How do I know my billing cycle and when to pay? Just go to your banking app and then you can see stuff in there. Where can I get info about my total credit utilization? I think you should be able to get that on your, okay, yes, Matthew is sharing a credit card statement. Okay.
I think we usually have these questions every time we have this kind of session, and I just want to provide practical example.
Yeah.
So when it comes to credit card statements, or every account has billing cycle and credit card cycle, even your phone bill has a cycle. So what do we call a cycle? A cycle is a period of 28 to 31 days, depending on what the merchant is using at their cycle. So for some people, it could be every 15th, every 13th, every 17th. Might vary by 1 or 2 days because of some leap year, because of February that has 28 days, things like that. So if your cycle is let's use a very good date. Let's say it is between 1 and 28 of every month. Sorry, am I sharing my hints now?
Yes.
Is it pink I'm sharing? Okay. So if your cycle is between 1 and 28 of every month, so what gets reported to the credit bureau is your balance at the end of the 28th. Don't forget, it could be 13th for some people, then that means the next cycle will be 14th to 13th of the following month. But we are using this kind of example because of February. We always use 1 and 28 so that it makes sense since February are 28 days. So what gets reported is your balance at the end of the 28th. That is your billing cycle date. That is your billing date. Now, your credit card can be a credit card of 3K. Your credit card is a credit card of 3K does not mean between 1st and 28th, you are not going to spend 10,000. I have clients and I have partners that don't like credit card. But because I am their financial advisor, I tell them, you must use your credit card. So even though you don't like it, you must use it. So if you want to buy anything, you want to buy a coffee of $5, pay with your credit card, transfer the money from your debit account into your credit card immediately. At least the transaction should pass through your credit card if instead of you using your debit card. So at the end of the month, this kind of person might have done a transaction of a total of 10K. 10K by using the credit card to pay, like you're a newcomer, you're buying fridge, you're buying TV, but as you are doing that, you are transferring the money back into the credit card. You are paying off. So at the end of the month, you spend 10K. Remember the balance, your credit card limit is 3K. So and this person did not send a total of 10K into that credit card. He sent 8K. You're sending 8K, that means you have used 2K from your credit card limit. So what gets captured at the end of the month on your billing date is 2K. However, what is best practice is that you should not have more than 30% usage on that billing date. So for this 3,000 limit, your 30% is 900 usage. So that means you should have paid up your card up to 2,100 as at that date, right? So that is one. I'm just trying to practically summarize Tobiloba's explanation. Now, when you get this bill date for this kind of person that spent 900 and has 2,100, so, and then it says you are owing us 2,100 from the 3,000 on your credit card, and then you're going to have another period of days to pay off. You have 21 days to pay off. 21 days to pay off this amount you are owing. So within that 21 days, your credit card will say, but you don't need to stress yourself. You don't have to pay. You just need to pay $10 minimum or $50 minimum. Pay. Now that minimum $10, $50 is what you have to pay so that they would not report you to the credit bureau as a defaulter. So once you pay this, then you are not a defaulter. But like Tobiloba said, then the balance of that 2,150 you are paying, or 2,050, you'll be paying interest of like 21% APR. It doesn't make sense. So it is advisable that you pay up. But there are many scenarios, there are cases that people cannot pay up, right? We just need you to be able to manage your finances. It doesn't mean that you will not find yourself in a scenario where you will not be able to pay up. You are not able to pay up this month, but by in the next 2 weeks' time, you have the money, pay up as soon as possible so that the interest you are paying in total won't be much. But in normal scenario, perfect scenario, pay up not on this 21st day, pay up like 5 days before this date so that it could take 3 business days for the money to synchronize, to really enter the account. Let me use Nigerian English. You know what I mean? To really be reflected, right? So that is what it looks like. And this is an example of a billing statement. You will see that scheduled payment date for this person. Sorry, Tobiloba, for taking your time. Scheduled payment date for this person is, I don't know if this is 12th of January or whatever date it is, 12/01, right? Then new balance is the amount the person is owing. But this is minimum, the amount he must pay for them not to report this person to credit bureau as a defaulter. Now, if this person borrows money, if you make a purchase, you use a credit card to make purchase, and you did not pay after that 21 days that I explained earlier on, this is the interest they will be charging. But if you make cash withdrawal, this is the interest. And don't forget, in most scenarios, when you make cash withdrawal, there's that instant charge for cash withdrawal, $30, $50. Even the merchants of the machine you are using may even charge $5. So at the end of the day, you might end up paying almost 80%. So that is what your credit card looks like. Okay. Thank you. And if you look at it very well, let me just also explain something here. So look at this date. I think this is This is month. They are using months here, month. So look at this date here. Good. This is a very good example. Look at this date. The closing date is November 6th. Closing date is November 6th. Plus 21 days they have to pay them. November 6th plus 21 days will happen to be 12 December 1. That's what happened here. December 1, that's the 21 days. Credit line. This person has a credit line limit of 2,100 and they still have 1,576.80 cents unused. They've not used that they can use. Meaning the amount they have used, which is new balance, because that new balance credit available credit is always confusing to many people. So new balance is the amount they have used, they are owing. I hope that provides some clarifications. Okay, over to you, Savvy Financial.
Thank you so much, Matthew. Thank you. So I would quickly move on to the next question. Yeah, I hope that helps, Tinuke, because I think Tinuke dropped that question. And Jeremiah asks, where can I get info about my total credit utilization? So Jeremiah, go to your banking app. I think there's a section for credit insight or credit reports. You can, yes, utilize that. Or there are some credit apps like Credit Karma helps you show your credit utilization as well. Where can I get info about my billing cycle for my credit accounts if I have more than one? My bank apps only show the due dates and minimum payments. So we explained earlier that the billing cycle starts immediately after the statement date. So if your statement date, for example, is 7th of the month, the billing cycle starts immediately again. The grace period, like we identified, is from that statement date to the due date, but your billing cycle starts immediately after your statement date to the next statement date. That's the billing cycle. What's Credit Karma and how? Sorry, I'm just trying to rush through this. Please, what's Credit Karma and how it's used? Credit Karma is a free app that you can use in monitoring your credits to track your spend and monitor your credit score. So just go to your Play Store, or if you're using Apple, just go to the what do they call it, and search for Credit Karma. It's a free app. There's no payment obligation at all. If we have some time, I can just share my phone, the one on my phone app, and how it has helped. I hope we get some time. Will reopening a closed account affect my credit score? No, I don't think it should affect or impact your credit score at this time. But I don't know if, depending on the period where the account has been closed, but just speak to your credit card company on that. But to the best of my knowledge, it shouldn't affect or impact anything. Can you elaborate on keeping old accounts open? How does that impact credit score? I think the major thing it does, the way it helps impact credit score is if you have an account for 8 years, and let's say 8 years, and I just picked 8 years, it could be 1 year, and lenders, when you apply for a new credit and they see that, okay, this person has had this account for the past 8 years, this credit card company has never reported you for late payments, has never reported you for, you get that kind of feel. They feel comfortable that, yes, you've been managing your debts with that company responsibly for the past 8 years. Rather than for you to open a new one this year, you've closed your 8 years, you've opened a new one this year, and you're applying for this huge amount of money, the lender will be skeptical and like, just 1 year. And that's why in most cases, some mortgage lender, they expect you to have at least 1 year credit report in Canada before they can approve you for their mortgage. If you are not, otherwise, some people are requested to drop a huge amount of down payments if they're less than 1 year in Canada. So having that long outstanding credit actually gives lender the confidence that, yes, you're able to use debts responsibly. What if I'm offered, Jeremiah is asking, what if I'm offered an increase to my, okay, Matthew already responded. Okay, I'm just going to skip over some of the ones Matthew had responded to. But the credit card can be tapped on the bus, supermarket, and for web payments, following Jacinta's question. Yes, your credit card can be used in supermarkets. It can be used on merchant websites. But for the bus, I don't know. I'm based in Regina here. We usually have a bus pass. So you buy your bus pass from your transit, from your city transit. You can use your credit card or your debit card or whatever you to purchase, to buy. I don't know if they accept credit card.
Yeah.
I mean, they accept credit card as well.
Yeah.
Okay, yeah, so
For
that's cool. So you
buses.
can actually use it on buses as well. Taiwo was asking, can you change your statement date on any card so you can sync? Yes, but it depends on your credit card company. So call the customer service and tell them, and some of them would even have some specified dates already for statement due date. So you can call them and tell them what dates are available, that you want to sync your credit card to be more convenient for you, and they will give you the dates, or they can ask you what date you want. So yes, it's very possible depending on the merchant. Courage is asking, please, regarding paying off, when I pay off after the due date on the 20th and use the funds the next day, does the system pick it that I have paid zeroed it? Yes. Or I need to wait. Yes, the system picks it that you've paid it, and then you can start. So the other one is starting another billing cycle. As long as you pay that one that the statement due date has identified as your due amount, it picks it up, and then you can spend it immediately again. Can we access the recording after the session? Taiwo Adigbeshan, I'm unable to say right now. Yes, I would have that internal conversation and see if it's something we want to share. And if you don't mind, is there any particular question, or did you join late or something, Taiwo? Okay, since Taiwo is not responding, do we have any other question? I hope you guys have found value from this session.
Please, I have a question.
Okay, Mubarak, you want to go
Thanks
ahead?
for this session. Yeah. What if you pay the amount you spent on your credit card before the statement is sent to you? And when the statement is sent, when you have no balance to pay, and when they are going to report it, definitely is going to be 0,000, just like you didn't use anything.
Yep.
Is that going to affect your credit score positively or negatively? Or still going to be the same?
Well, I think well, I would say it should be a positive impact, because it's not showing that you have any overdue payments. It's not showing that you have any missed payments, to the best of my knowledge. So it shouldn't be a negative impact in this case.
Because why I'm asking this question is I pay before the statement even comes out.
Okay.
So everything is always 0,0. And most of the time, for the past few months, my credit score has been the same number. It's not increasing, it's not decreasing.
I wanted to say that it doesn't have any impact. Paying early does not have any. So you that paid early, that paid at this, like as you spend, and the person that paid on their due dates after the statement, no. So the only difference is you might not get your lender may not offer you increase in your credit limit because you are not using it, and they may offer the other person, like this person, maybe this 2001 is not even enough for this person. Let's offer him 3,000, but they want to really put you in that situation whereby you really borrow money from them. So that's why they will tip off you. But for you, you just feel like this is not a client. You know, pay them. Let's put that way.
Okay, thank you.
You know, pay them. Yeah.
Okay, Juliet, I see your hand up, and then we can wrap up the session.
Okay, good afternoon. My own account is a new account, and my due date is showing November 14th, and the due amount is showing 0. But I've used a chunk for my credit card, but I've paid it back. So right now the balance is just like 130 something, and I have a credit limit of 2,000. So if I get you correctly, my billing cycle is starting from today, being 15th November, so like the next 21 days. Is that correct? And for the fact that my balance is showing 0, like it has been 0 since the very first time the account has been opened, the due amount has been showing 0 too. So I don't understand, like, what is X? Because I was hearing somebody say you need to have a balance as at the time that the account is being reported. If not, they'll say you're not spending the money and you don't need it, something. There's been like different stories flying around everywhere concerning this credit card thing. So can you like clarify for my own scenario now? From today, everything I spend is like in the next 21 days to be likely reported to the credit bureau. So what exactly should impact my credit score? Because right now this credit score is like 722 when I checked with the app. So what do you
Okay, so right now, if you do not have any payment amounts due or any due, that's okay. What you're going to be seeing on your credit statement, on your credit details right now on your banking app would be your current balance. current balance equals your statement balance, which is 0. You know that's 0 plus new purchases. So those are the new purchases that is reflecting, right?
Okay.
But if you do not pay back this new purchase before the next 14th, or when did you say your statement is, you would now see it under your statement balance. So if you want to do it, just watch it, spend the money, and then wait till the next statement date to come out, and then you see it as a statement balance.
Okay.
So the statement balance is what you now have to pay before the due date. But if that statement balance now comes up as, let's say, $500, and after that statement balance, you still spend like $100, your total current balance will now be $600. But the moment you now pay that statement balance of $500, your current balance will now reduce to $100, being the new purchases you made after your statement balance. I don't know if that helps. It can be crazy doing the calculation, but yeah, over time you get a hang of you get a hang of it or something.
It's fine. Thank you. It helps.
Yeah. Okay. Chitachi, you want to go?
Okay. Hi, Tobiloba. Thank you so much for the
Welcome.
session. Yes. My question is the cycles. I just came here as well. I just got in on Monday, and I'm just trying to understand the cycle of the statement date and the due date. So does it mean that after, I think 21 days, so 21 days after the statement date is the due date? Does it then mean that a few days after that due date, another statement date is around the corner?
Yes, that's what it means. Yes,
That's
that's
what it
very
means.
accurate.
Okay.
Yes, that's what it means.
Okay.
Yes, that's it, basically. You're very correct.
All right. All right. I just wanted to
Yeah.
confirm.
Okay, so yeah, I think we are past our time. We actually thought we could have this under 1 hour, but thank you also very much for engaging. We are very grateful that you're part of today's insightful session, and I want to believe you all found the session very valuable and that it has had clarity to how you can use your credit cards responsibly. Yes, so and a big thank you to Machi too for coming on board. I didn't expect it was going to even be available, but thank you so very much. And for assisting with the response to the questions. And yeah, one more thing, this webinar is brought to you by the group, is it group or no? What do they call it? Members of the National Financial Literacy Campaign Group. We created this group to help immigrants learn about handling and managing their finances. So the expectation is that it will provide you with relevant knowledge and the skills you need to make important financial decisions that would promote your financial stability and well-being. With that being said, if you are very eager to enhance your knowledge, you are invited to join our community group on WhatsApp. I'm just going to put the link in the chat box. Please feel free to join. We usually have a monthly cadence where we talk about different topics. And if you have any burning topic on your mind that you would really want us to bring out in the open, or you would want a larger group to talk about it, please feel free to recommend it in the group chat. And then, yes, we are very, very open to go research about it and come and share knowledge. We believe learning doesn't end, right? So yeah, before we wrap up, I know we are going to leave very soon. If you have any further question, or if there's anything specific you'd like to discuss about your financial situation after the session, we are here to help you. So feel free to connect with me. And yes, I'm happy to support you on this financial journey. I'm going to drop my number and my Calendly link in the chat as well. And also, if you can follow me on IG, Instagram, TikTok, Facebook, I share content related to, how you can make more money for yourself. Remember, I said I am an MMM advocate. Make more money, manage your money, and multiply your money. So yeah, thank you all very much for joining, and do have a wonderful Saturday and a very restful weekend.
Thank you.
Bye.
Thank you so much.
Welcome.
Thank you.
Thank you.
You're welcome, Taiwo.